Hello and welcome. You're watching Countdown on Bloomberg went live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. Benchmarks trade with deep cuts fall the most in over a month, and realty is the top sectoral loser on the street today. It has been a good start to the year for auto players, with most companies reporting healthy sales in the month of January. Hindalco and Bajaj Auto slip in trade after reporting their December quarter numbers. Hindalco meets street estimates while Bajaj Auto disappoints. The 10-year bond yield hit 7.65 in trade but slipped after reports that the RBI will intervene to calm markets.
And of course, a clutch of numbers that we'll be talking about as well. But firstly, the markets and continue to remain under pressure. So 1.67% down. It was trying to recover a little bit midway through trade, but then succumbing to some bit of selling pressure to the Nifty Bank. Similar lines, really 2% down and led by private banks. In fact, I mean, yes, we'll pull up the heat map and show you what's happening there. And a sea of red. There are, well, few spaces of green, if you will, in the technology space or otherwise, but the heat map will show you a lot of pain in Reliance, a lot of pain in private banks, private financials like HDFC and HDFC Bank. So those have under some bit of pressure too. And of course, let's get up the individual names going. HDFC down 3%. HDFC Bank was down and amongst the top contributors. Reliance Industries was down about 3% in the session today at about 3.5% down right now as well. Maruti under a lot of pressure. So these are heavyweights. ICICI Bank is down as well. So these are heavyweights which are putting the pressure on the index today. Negated to a small extent by what's happening to ITC. ITC is just kind of helping hold and do whatever little it can, about 1.5% higher, and that one is doing okay. But otherwise, a lot of pressure points, and the market breadth too very, very adverse. Just bring up the advanced decline ratio once before I hand it over to Pradeep. The market breadth is terrible today. Close to 1:10, actually 1:11 odd in favor of the declines. This is a stark sell-off that we're seeing at the broader end of the spectrum. I wouldn't be surprised, Pradeep, if you're starting off your list. I haven't read it, but I wouldn't be surprised if you're starting off with either Vakrangi or PC Jewellers.
Well, you predicted it at least a week back, so you got to be right. The kind of bloodbath that we have seen in mid-cap and small cap is something Dheeraj has been talking for a while. And while index has found some support, story is not the same if you look at the broader end of the market. To begin with, Vakrangi, that is locked at lower circuit, and it has taken PC Jewellers along, although stock recovered quite a bit from day's low. It had corrected almost 50%. Still down after some clarifications issued by the management that Vakrangi buying into PC Jewellers or buying some shares of PC Jewellers from secondary market was not under any kind of corporate relationship or understanding. But market is not completely convinced. And also looks like there is a lot of pressure on a number of high beta names. So look at Just Dial, look at GMR Infra, look at Himadri Speciality, or then CET. Although numbers were not good, but the kind of reaction that we have seen, it kind of also tells you the market's mood currently. One sector, or rather the group that we always look for, the high beta names of ADAG group, they're all down, Reliance Naval or Reliance Capital. So you'll find 99-95% stocks in red, but there are a few exceptions. TTK Healthcare numbers have played a part, and also the stock started moving up yesterday after the kind of announcements that came into the budget. And also Apex Frozen, another stock, or rather a segment that has been doing well yesterday and today as well. This stock is logged at 5% upper circuit now in otherwise weak market.
Well, Pradeep, a lot of these over-leveraged stocks have taken a beating in today's trading session. But let's also check what's happening in the futures and options market. Goes without saying, the sentiment is very negative. In fact, if you look at the levels on Nifty, we've also breached yesterday's low level, which was somewhere about 10,880 or thereabouts. But right now, Nifty is down 180 points, 10,836 is the level. Do watch out for the 20-day moving average now on the downside, which stands at about 10,833. And mind you, the index is trading pretty close to that mark. So if we close below the mark of 20-day moving average, probably we could be in for a further sell-off. In terms of option strikes, well, clearly today is the day for the call writers. We've seen call writing coming in for the out-of-the-money strikes. So look at strikes like 10,200. In fact, pardon me, 10,900 is the call strike, which has seen maximum OI addition. As you can see on your screen, 14 lakh shares have been added there so far. And not only that, the 11,000 mark, now that's become pretty crucial for the market after Nifty's breached that mark. In fact, in today's trade, 11,000 has seen almost 16 lakh shares. The 10,900 has seen almost 13 lakh shares. On the put side, well, the put writers are now running for cover. You've seen unwinding for the 11,000 strike, 11,100, and also the 11,200. All these strikes have seen unwinding in today's session. When you talk about the bank Nifty, the cuts have been sharper than what one saw in yesterday's session, because remember, yesterday bank Nifty protected the 27,000 mark, but today it was a gap down opening, and in fact the losses which you see have been contributed from both the private as well as the PSU banks, be it State Bank of India, ICICI, HDFC Bank. All of them are the heavyweights here. For Bank Nifty, the 20-day moving average somewhere is about 26,549. So that's the level that you should be watching on the downside. In terms of F&O stocks, well, Pradeep's highlighted most of them. So I've chosen the stocks where the reaction is on back of earnings. I'm going to start off with JSW Steel. The numbers were pretty strong. They came day before yesterday, and the stock has been quite resilient in a weak market. Remember, yesterday it was up 4%. Today also it's been sustaining its gains of nearly between 2 to 3%. If you look at this counter, it's trading around the 52-week high mark, and also the earnings on the operational side were pretty strong. So watch out for this counter. I've not seen much of build-up when it comes to the February futures, but definitely looks like the traders are taking a bet when it comes to the option strike of JSW Steel. Well, the other one is Cummins. That stumbled quite sharply today. The reason is the numbers were not so good. It's a degrowth on the top line, on the bottom line of this company. But look at the build-up for the February futures, 33% higher. That's telling you there is some short build-up which is taking place. Cummins has also touched its fresh 52-week low in today's session, and the futures right now are trading at a discount of almost 6 rupees.
Well, pain for sure on the bourses, but maybe it's not just an India-specific problem. The rest of the world too has some bit of pain points. Rahul Chadda, Co-Chief Investment Officer at Mirae Asset Global Investments, joins us right now on the show. And let's start off by getting his opinion on what he made of the budget and what about the weakness as well. Rahul, good having you. Thanks so much for joining in. Some fiscal slippage, LTCG, and we've had multiple conversations about this with people already, but just wanting a sense from you, do you attribute the weakness that we're seeing in our markets today due to all of those factors, or do you think this is largely what's happening across the world and getting shown in India as well?
Yeah, I think it's a combination of both. See, budget was clearly a dampener in terms of imposition of, again, the long-term capital gains tax, though there were fears, whispers of that for some time in market. But look, when the event happened with the backdrop of a global correction, it would lead to correction, and that's what we are seeing. But to be fair, what's also happened is some of these mid-cap, small-cap names with weak business models had stretched valuations, and this unwinding had to happen. And that's where budget and the softer global backdrop is being used as an excuse for people to reduce their positions. So honestly, won't be too worried about this. What matters for markets is the economic recovery, the earnings trajectory, and that remains on track. I think correction over next week, 10 days should provide good entry points for long-term investors.
Rahul, I don't know if you got a chance to interact with FIs who invest into Indian markets. If you have, what's the kind of feedback are you getting? Does imposition of LTCG changes the India story going ahead?
Look, it does reduce the attractiveness of the story, but again, like the way we've discussed before, if you look across the region, there are a handful of good stories. China would be one, India is there, Korea is there. So these are good stories. The attractiveness gets reduced. That would come somewhere in the valuation premium India would command over rest of the markets. But let's say post a 5-7% correction, that's there in the prices basically.
Okay. But if you look at the current valuation historically, if you compare it with other markets, maybe we are not that expensive, but historically compared to our own valuations, probably these numbers were never seen. Now we have seen a reaction in mid cap and small cap space already. The kind of panic that you see even now when we are talking, do you think there is a possibility of a deep correction given the kind of valuation gap that exists with historical valuations as well as between mid cap and large caps?
Okay, so when it came to India, we were specifically worried about the valuations until mid of last year because growth was very narrow, restricted to few consumer names, whether it's the consumer finance companies or select consumer discretionary. If you see over the last couple of quarters, growth's become a lot more broad-based, and that's what gives you comfort over the longevity of this rally. The names you kind of alluded to, where business models are weak or stocks are baking in too high implied growth rates, they are vulnerable to kind of a disappointment. See, you can't give peak multiple on peak margins, and somewhere market is going to realize that, look, doing real business is a lot more tougher than spreadsheet modeling, and that's where we'll see these names go through their business cycles. The stocks would derate, and that's a normal market cycle. But at the same time, if we see economy do well, the industrials should do well in future. Some of these corporate banks should come back and do well, and even for some of the retail banks, 10% lower, you'll have enough risk reward from a 12-month perspective in investing in these stocks.
Rahul, what was the biggest disappointment for you from the union budget this time around?
Honestly, going into the budget, there weren't really much hope. See, post GST, a lot of indirect taxation is any which way taken out of the budget. Looking at the details of the budget, see, the only thing I'll say is some of the revenue assumptions have been way too optimistic. So one's got to see whether those assumptions of 17-18% growth rates play out.
Okay, sorry, did I hear you say 17-18% on the revenue front? And I was just, just net for net. I mean, you're talking to the GST revenue assumptions. I mean, do you think they have been as high as 17-18%? I think we've lost Rahul. We'll just try and repatch that line for you. Did I hear him say 17-18%?
Yes, he did mention it, but I think he was referring to the earnings growth. I guess so. I think we should check back with him. I don't know if it was about GST.
And you know, I'm just referring back to some conversations that we had during the day. Saurabh, Rhythm, as well as Neelkant, and all of them are of the opinion, at least I got a sense from two of the three at least, that they believe that the government has probably played it safe and not overstated the revenue estimates. If at all, if the corporate earnings is pointing towards 14-15% growth, and if we have a nominal GDP of 11.5, if anything, the government has understated the revenues, and maybe there's a chance, outside chance, that the revenues might actually overshoot what the government is projected as of now.
Which is going to be a big positive then for
that doesn't happen very often though, and let's see. In an election year, you know, one would also feel that budget maybe if there is additional revenue, people will find some ways of spending it. So maybe that could also have been a case. You know, because government may like to spend more on some of the popular schemes where we have been complaining that there is not enough allocation. So as and when money comes in, and if they are able to really, you know, execute it well on time, they could
already
choose to
announced
spend
so much to revive the rural economy. I'm sure they must have budgeted for it. The extra money.
Yeah. So right now it's under budgeting also. That's what experts are telling us. But they're also telling us that there is underestimation of revenue. Probably looking at the macros currently.
Maybe they've done this deliberately because they've already missed the fiscal deficit target of FY18, and the FY19 target has also come above what the street was estimating.
Yeah. Well, let's see. Maybe the bond markets are also not quite happy with the 3.3%. I mean, maybe the markets believe that if the government is saying 3.3, what if don't meet as they've done in at least.
I heard at least one voice, that was Neelkant Mishra, who said that bond yields will cool off.
Yeah, he said that over 7 months he believes that the bond yields will definitely cool off.
Because at the same level of deficit and growth and inflation, I don't think we have seen this kind of bond yields.
Yeah.
So it's a bit higher given the kind of macro framework we have. If we are assuming 7% CPI or a slippage in fiscal next year to 3.5%, I think a lot of negatives are getting priced in.
Yeah. Well, and maybe it's good that all of this has happened right now, and eventually we probably see a bit of a cool off as well. But so let's see. Okay. Anyways, maybe you get in a final thought as well, Rahul. If we have you, sorry, I missed your answer. You spoke about revenue estimates of 17%. I mean, did I hear you correctly? And the reason I asked this to you again is that because if any, sorry, please carry on.
Yeah, no, I think we've looked at the budget estimates, and that's where some of the revenue estimates in terms of the growth rates, etc., look on the higher side. So again, if the growth recovery is strong, as one is envisaging, these should not be an issue. But look, if there is a disappointment on the growth, I think it would be tough for those fiscal deficit numbers to be met, basically.
Rahul, and something that we were discussing while you were not online. What are bond markets really indicating? Are they being too pessimistic in your opinion with regard to the CPI forecast or the say, slippage expectations in terms of fiscal deficit?
I think what's happening is, bond markets are taking a conservative view because they're yet to see this kind of buoyancy which the government is baking in terms of the GST collections. But look, I mean, which is where RBI will come and do a bit of OMOs. But in due course, if the revenue collection kind of picks up, then these yields would be a good entry levels, basically. But for the time being, yeah, bond markets have taken a conservative stance that these numbers look a bit stretched compared to what one has seen with GST over last 6 months.
Right. Rahul, the month of January was pretty good for Indian markets when you look at the FI investment, which was actually absent, in the last 5 to 6 months before that. But do you think post the budget, we could see some shift in the fund flows from the Indian markets to other emerging markets now? Because a lot of these brokerages, they've already cut down their allocation with regard to, the allocation which they had assigned for India. For example, CLSA today said they are still overweight on India, but they've cut down the allocation by almost 2%.
I think again it's going to be contingent on the economic data. So if we see good set of numbers, which the quarterly season's been, we see good macroeconomic data, flows should come back to India. From a EM fund perspective, we've seen higher allocations to EM funds, so that obviously means India gets flows. And in across the region, if you look at this, I think China is only market which stands out strongly in terms of strong earnings growth across sector. In Korea, there's been an issue with semis. Again, there's been government intervention with the Korean banks. There's talk of a taxation coming for FIs investing in Korea also. So that way, if the Indian earnings momentum picks up, I think India should get flows and continue to be overweight for FIs in coming quarters.
Rahul, do you have any targets for Sensex or Nifty for next 12 months?
It's tough to put a number to it, but look, fair to assume that take a derating of 10% for this imposition of long-term capital gains tax, and on top of that, whatever the earnings growth rate is, 15%. Take a two-year CAGR because we're coming out of a low base, but 2-year earnings CAGR of 15-17% should be a fair number for benchmark returns.
So you're penciling in an earnings CAGR of 15% and a markets CAGR of 15% as well?
Yeah, so I think give or take kind of a 5%
sure.
for the correction because of the multiple derating. I think, and then you put a 15% return from there. Yeah.
Wow. Okay. Just one last question from my end, Rahul. What do you think within India drives earnings over the next, say, 18 to 24 odd months? Would it be economy-facing names, infrastructure owners, corporate-facing corporate lenders, etc., move up, or would it essentially be still tilted towards consumption and that kind of pocket?
I think what happens is, again, banks would kind of lead this rally. Tech, which has been an underperformer, would at least give anywhere around 10 to 12% dollar returns. And then you'll see some of these consumption names do well. Wherever we see growth pickup, having margins remaining intact or profitability improving, those names would do well. Again, a sector which has done well, which we didn't talk about, is metals. See, with the strong global outlook we've seen for these metals, and it's going to be there for next 12 to 18 months. I think some of these metal names may continue to see a multiple expansion.
Rahul, just a last question from my side. Do you think the measures or the schemes which were announced by the finance minister in the budget are inflationary in nature? And obviously, we cannot do away with the upside risk that we still have, considering the crude oil prices are inching higher. Would you be surprised if there is any sort of interest rate hardening which we get to see in 2018?
I think you've got multiple questions in one here. If we look at the industry capacity utilization, that's still running at about 70-72%. So there is enough slack in the system for it to be truly inflationary. A lot of this, the food inflation is a transitory inflation, so it doesn't make sense to get worried about that for long. In terms of overall bias, I think the softening is behind us. Globally, we are seeing central banks tightening. We're going to see withdrawal of the central bank liquidity. So bias is more towards kind of an hardening or interest rates going up. But it's not going to be a sharp spike. I think it's going to be a pause for a couple of quarters by RBI. And then you may see a bit of an increase in interest rates as the slack in the economy gets used up.
Fair call. Rahul, appreciate you taking the time out and joining us the day post-budget. Good having you.
Yeah, thanks for having me.
Well, that's Rahul Chadda of Mirae with his thoughts on budget and, well, the outcome and the outlook for the markets as well. You know, we spoke about, Navneet was asking about interest rates, bond yields, etc. It's not just India. I think US, the thing seems to be the same, that yields seem to be breaking out of multi-year downward trends, and Pradeep has pulled up an interesting chart, I believe, which dates back or goes back multiple years, Pradeep. What is multiple decades? Okay, what does the chart say?
So as you pointed out the other day, when I looked at the data, it really looks interesting, because what you have right now, here, you know, this chart starts in 1960, 62. So it's a long-term chart, quarterly chart, as you can see. So every data point here is the last date of that quarter. You know, the 10-year US bond yield on the last date of that quarter. That is how you get this chart. Now, what is interesting, this very recent trend that started in 1987-88. So again, you have at least 30 years of data here, right? That is what we have. And US bond yields have been coming down. There was a very clear channel that you can draw here. And from this downward sloping channel, recently we have seen a breakout that you can see if you focus on the last bit. So in December, when the December data, the December 31st number that we got, and till date the number stands above that. So that is where we see a kind of a breakout. Since this is a long-term chart, since we are looking at quarterly data point, I would mention that, you know, you should wait at least for 6 months for a clear confirmation. You should probably wait for 3% mark to be taken on 10-year. Mind you, 30-year has already gone above 3%. But if 10-year again goes above 3%, that would be further confirmation if you want to trade this long-term trend. But why is it so interesting and so important? Because, you know, recently, when global prices have gone up so much, all the experts, and that includes Warren Buffett, have been justifying the valuations based on the cost of fund. And they all said that if you are comparing the PE that was 30 years back, also look at the debt, the cost of debt or the cost of fund that was 30 years back. Even the worst case scenario, the yields kind of bottomed at around 5%. And now the yield is kind of topping out at 5% if you look at what happened over the last 10 years. So if this trend is getting over, it will probably take several years to, you know, play out. But definitely the downtrend is over, and therefore the kind of valuation expansion that we have seen may not really last. How far will it go up in this cycle? That remains a question. But yeah, a long-term trend, a very long-term trend is turning. There is a breakout from a 30-year-long channel. We must take note of that.
Wow. So there was a bit of a pull down of the channel even in 1995, is it, or 1994?
Yeah, so that's why I say that, you know, you should wait at least for 2 data points. You get first data point on the last day of March 18 and the second one on last day of June 18, and then you can be sure that, okay, there will be a breakout. So, you know, normally if you're looking at a 200 is moving average, I say you wait for 3 days. But when you're looking at 30-year-long channel, I would say wait for at least 2 quarters for a confirmation. But looks like, you know, that there is a significant up move and a decisive breakout. In fact, you can, on the short-term chart, you can see a small head and shoulder also building, which has given a breakout.
Wow.
That is fine. We are looking at 30-year chart, so let's not talk about what has happened over the last 12 months.
Yeah, that's interesting. And, you know, I was listening into Ray Dalio from Davos, and Ray Dalio made a point that there is an outside chance, according to him, that the Fed may raise rates quicker than what they are even projecting right now. He believed that, and his thesis is that US bonds are in a bear market while equities could do well over the next 12, 18 months or so. Goes with Jeremy Grantham's piece of a melt up, though Howard Marks disagrees. So you obviously that's what the market is made of, people who agree and disagree. But Ray Dalio believes that there is an outside chance that rates will have to move up even faster than what the US central bank is projecting right now.
So, since I have been tracking banking sector for the last 18 years, and in that course I have also tracked US Fed very closely. Everyone believes world over that Fed will not really be able to deflate the bubble. They'll probably wait for a large enough bubble to build, and then they'll get panicky, and then they'll start raising rates at some point of time. I don't know when it happens, but inflation may just come up much before we all expect it to come up because of that reason, because Fed is usually behind the curve. That famous Greenspan put tells you that he prefers to be behind the curve and then come back and protect the market, or help reflate the asset prices, and that tradition stays. Although Greenspan has gone, he's 90 now.
Yeah.
So this may happen, and that is what probably bond markets are discounting, that inflation is coming back. 2018, watch out for inflation, and this chart is going to track inflation more than Fed. Fed may still stay behind the curve for a long time.
Yeah, in fact, the Fed may follow this chart. That could well be the thing that will happen. Yeah, let's wait and watch. Anyways, that's an interesting analysis. Thanks for that, Pradeep. We'll watch out. Maybe at the end of 2 quarters, we'll reflect back upon this chart and then look at how quickly, if at all, this line moved up above and broke out of the channel and continue to break out of the channel as well. Could be very, very interesting. By the way, as we speak, the markets have come off and come under some pressure. Again, now 2% down for the Nifty. So we're now trading at the lowest point of the day.
Yeah, it's also broken the 20-day moving average, which we were talking about at the start of the show. It was 10,833. It's also breached the 10,800 mark in today's session. Yeah,
and banks, yes, but the others too. As we said, the likes of Reliance and a few others. Maruti Suzuki is down about 33.5% in trade. So a clutch of heavyweights under pressure. Look at Reliance, that is down about 4% in the session today. Maruti is under 4% in the session today. This is a lot of pressure on a Friday. I wonder what the European markets are doing. Just get them, because while US recovered a bit, European markets didn't do that yesterday. And just want to see if Europe is under a bit of pressure in today's session again or no. And whether, no, I mean, yes, it is under pressure, but not really so much that it will put undue pressure here. A fair bit of pressure on our markets in today's session. I'm sure the broader markets too, the small cap, when we started the show, was down about 4%. That would have probably worsened up a bit as well.
Yep, the small cap index is now down almost over 5% right now of NSE. But the earnings, Bajaj Auto, remember, it was a slight bit of disappointment which we, saw from Bajaj Auto's earnings. But look at the stock, it's tumbled almost 6.5%, currently trading right now at a day's low. So little bit of negative news is also turning out to be a very bad news for a couple of these earning-related stock. But one stock, the heavyweight, which is holding out since yesterday, is ITC. Remember, there was no additional government cess, which the market was expecting. No news of additional excise duty as well came about. In fact, today we had JP Morgan and Credit Suisse, which upgraded the counter of ITC, but I think that's also come off days high, considering the sentiment is too negative right now. But one pocket I want to highlight, if you could just pull up CA, the tire stocks have seen a big beating in today's session. Obviously, we know the tire stocks were doing well in the last few sessions. Look at CA, it's down almost 11%. Pull up MRF. Remember, the numbers of MRF were pretty strong. The counter reacted pretty positively. That's also down almost 4%. You've got Goodyear, JK Tire, Apollo Tire, you name it, and all these counters have taken a big beating in today's session.
Looking slightly wobbly here, you could attribute to results as well, but the others maybe not so much. Actually, look at the broader end of the spectrum. A lot of names which are supposedly the good quality mid caps, and right now the market is not differing between a good quality mid cap or any other mid cap. Punishment is meted out to all. Yes, the others like Vakrangi, etc., are falling a lot more, but some of the cement names, for example, some infrastructure names, for example, there's a lot of pressure out there.
So the question really is, what Navneet just mentioned, that it's the leveraged companies that are taking a beating, or maybe it's leveraged investors who are taking a beating, and therefore there could be some amount of forced selling in this market. Looking at the momentum, and we must remember that Nifty has given a breakdown today. but mid-cap index and small cap in particular had fallen already. So there is, I think, at least a 15% correction from the top that we have seen. And anybody who was waiting for budget and thought that maybe post-budget there could be a relief, it's not coming.
I don't know if you guys remember last week, in fact, this week itself, we were discussing with our guest how SEBI had asked the exchanges, to collect extra margin from the clients who've taken more exposure into the futures and options market. Probably that's also playing out today. So clients who cannot fulfill their obligations, I'm sure the trading members will be forcing them to shut their positions in today's session. The kind of sell-off that you've seen in these mid-cap stock futures, I think it speaks volumes about it, how margin requirement will be an issue now.
So it's Friday, this
yes.
last day of the budget week. Usually during budget week, even on the margin funding, brokers put an additional requirement for margin. So there could be some pressure coming from there.
Yeah, possibly. And by the way, but just to point that and what we pointed out is very correct, but it's again not just happening on the F&O stocks, the non-F&O stocks, and a clutch of them are falling like a pack of cards. Kolte Patil is down 10% in the session today. So there's a clutch of those names too, which have gone down really, really strongly in the session. Anyways, let's get in our experts on board to try and figure out what are they doing in a scenario like this. Aditya Agarwala of Securities joins us, and I'm told Sarvendra Srivastava who should be joining us any moments from now as well. Aditya, thanks so much for joining in. What have you been observing and what have you been telling your clients to do?
So there's selling, no doubt about that, in the markets, especially the mid-cap and the small-cap space. And this was there for some time in the markets now. Now the large-cap stocks have started to correct in trade yesterday and today. We're selling a sharp sell-off. But having said that, markets are coming to support levels on a very short-term time frame if I talk of. So intraday charts, if I look at, the markets have come to support level of 10,750 to about 10,800 is a good support zone. So one can actually look for a long trade, keeping a tight stop close to about 10,750 to about 10,700 and go long in the markets at current levels for higher targets of about 11,100.
Go long?
Yeah.
Would you take the chance of it's a counter trade?
Because we're seeing massive selling in the markets, and markets are sitting at extreme oversold levels on intraday charts. And if I take a look at the mid-cap and the small-cap space today, they've actually taken support at crucial trendline support.
Is it like a short-term trade or STBT that you...
so for Nifty, it's more of a short-term trade, definitely. It's more of a counter trade just for a pullback rally in the markets, keeping in mind that we are sitting at oversold levels. But for a mid-cap and a small-cap territory, we've seen a good 15 to about 20% correction already from the peaks. So these levels make good entry points if somebody is looking at mid-cap and small-cap levels stocks.
Aditya, as a student of technical analyst, I'll have a problem here that if you look at the weekly candle, you have kind of a clear engulfing today. How do you really go against this trend? I mean,
so this is not a okay. So if you take a look at in the history as well, Nifty has made several bearish engulfing patterns on a weekly chart, but markets actually just forgo that bearish engulfing pattern, and a couple of weeks later markets resume their upward trajectory. So bearish engulfing pattern on weekly charts have not been too much of a concern in an upward trajectory markets, especially if you take a look at the Nifty futures chart. There are a couple of bearish engulfing patterns we've seen on the weekly charts wherein markets just hardly correct about 1% more and they start to resume their upward trajectory. So right now also, if I look at the hourly chart, if I take a look at the 2-hour chart, 4-hour chart, probably markets are sitting at oversold levels. So I'm playing for a bounce at the moment. So let's see if 10,700, 750 levels hold, we could be in for a good short covering rally in the markets.
Well, let's wait and watch. The commentary, of course, until day before yesterday was that there aren't too many shorts in the system. But let's wait and watch. Let's see if those levels hold out. We may not get a chance to see that today. Maybe Monday or Tuesday would be a better day. I mean, I would be really skeptical if, really skeptical of the markets closing about another 100 points lower, but you never know. Funny things happen. with that scenario in mind, Aditya, what are the stocks that you're recommending? So
we have a buy on Narayan Hurdale. Stock is looking good at current levels. We've seen buying on good volumes in trade yesterday and today as well. So looking at a target of 312 here. So one can keep a stop close to about 285 in Narayan Hurdale and go long. The second long again is Ashok Leyland. Stock has been in a consolidation phase for quite some time now, and it's coming off that consolidation phase. So I'm looking at a target of 133. One can keep a stop loss at 120 in Ashok Leyland.
Okay, so that's a very bullish view coming in. Well, let's get in. I think I'm told Sarvendra Srivastava is also with us. Okay, let's get him in on the show. Now, Sarvendra, you were bearish for a really long time. Today is probably A day which you would have hoped would have come maybe 400 points earlier, but nevertheless, my question to you is, from this point onwards, now that the markets have corrected 2% already, what does an average trader do according to you? Does your reading of the charts indicate some support at these levels and a counter trade thereof, or are you telling your clients to initiate bearish trades currently?
Yeah, very good afternoon. See, November second week is 10,500 was where we turned negative broadly. And if you compare that high with the current high that we made around 11,100, 60% of the universe was still lower. So which means almost 60-65% of the universe was lower at 11,100 than at 10,500. So even though there was a little bit of pain involved in any trade, and then you get out and then you get in. So that ways I would say that yes, it was painful. But overall, if my clients probably had sold, then I think on a portfolio basis at 11,100, they were still at par or slightly better off, because it was just a few leading stocks probably which ramped up the Nifty. And I would continue to believe that this, on a medium-term basis, I think we will slip towards 9,700, 10,000. So I would still have that view and would believe that eventually for a larger support and a launch pad for the next bull market, if at all we have to build, I can't see it happening from here itself. So I would say that eventually around 3 to 6 months, 9,700, 10,000 would get tested. Now in between, will there be 100, 200 point bounce? It's a very, very difficult question to answer actually in this volatility. But yes, you can say that 100, 200 points bounce is possible. But I would, in fact, if the bounce comes, I will want to initiate more shorts, and I would definitely want to be light here and tell clients to be light and sell wherever they have profits and lock in their profits and take some money home, because this market is not running away in a hurry. So it will give you time, and it will give you lots of time.
Sarvendra, what could be some fresh trading ideas, maybe on the short side?
Yeah, absolutely. We have sell side ideas as well, and we have a couple of long side ideas as well. But long only ideas are only in the IT space. I can't see anything else where I would probably initiate a long trade, and probably maybe an ITC HUL. So defensives will be long, excluding pharma, because pharma setups are still not out of the woods. So pharma, even though it's a defensive sector, but I would not venture out and put long trades in pharma. If I have to do that, lever, ITC, and the entire IT basket, the leading names probably will qualify for some buys, but everything else probably is a sell.
Well, the index is headed for the worst day of 2018. So, well, it doesn't come as a surprise, but it's important to look at it from a perspective of what's happening for the last 33 days, excuse me, and maybe 23 odd trading sessions. But look at that. We've had a fair bit of green on the screen in the Nifty in the last 1 month, but this is the worst day on the index currently. Okay, so do watch out for the index in particular. Okay, just before we hear out Rhythm Desai of Morgan Stanley with his thoughts on the budget as well, Sarvendra, just a thought that I want is on Bajaj Auto. It's a stock that's fallen off the cliff today post numbers coming out, but 6% down already. Usually a very stable stock. Is there a trade here?
Yeah, there was a trade. In fact, it is one of my sell trades. But the problem is, from the time that we did the graphics and from the time that we have reached, it's already 100 points down. So I would have to kind of look at revisit targets. But I still believe that 3,000, 3,100 is still possible. So now the only thing is that 31 was my target earlier, but now it's the stop losses and risk rewards have kind of inverted. But I would say that I would revise the target. I will still sell, look for a target around 3,000. And earlier I had kept a stop loss at 33.76. I would say that now I will keep the stop loss at 3,300 and above 3,300, which is 33.01, and short Bajaj Auto for a target around 3,000, 3,050. So it was my short trade, and it is in the short basket itself.
No, I was just wanting to ask you, I mean, from the time that you did the check at 2 to until now, has there been substantial build-up in any of the specific names? Because I can evidently see Reliance, Maruti, etc. further off from where they were. So obviously they would have seen some selling pressure, but anything that stands out on the F&O side?
PC Jewelers. And I didn't mention in my check as well because we've been talking about it. Besides that, Cummins I did feature in my list, and V-Guard, Just I'll see it. So these are your top losers for the day alongside Bajaj Auto, where a huge amount of short build-up so far has been seen. And Neeraj, you were making a point of there are no short positions in the market, but you know what?
They weren't.
No. But today as well, if you pull up Nifty futures, Bank Nifty futures, there's no huge amount of build-up on a day when market is 2% lower. You will expect traders will come out and take a bet on the short side, but that's not the case. So which tells you so far it is only unwinding of positions, and don't go by that number of 4 to 4.5%. By the time the Bhav copy comes towards the end, these are all intraday trades where you see a bit of unwinding which takes place. Yesterday, Bank Nifty open interest was down 5%, day before as well. So till now, it is only profit booking, and let's not forget, I guess this month itself, Bank Nifty was the one which is outperforming Nifty as well. And I think it's very close to breaching its 20-day moving average of 26,550 or somewhere thereabouts. So probably if the closing comes below the 20-day moving average, I'm sure Nifty is going to close below the 20-day moving average today. It's 10,792. It's breached 10,083 for the day, which technically tells you there could be more selling pressure which could come about. So I'm just saying there are still no fresh shorts which are coming. Maybe there are 1 or 2 more days of profit booking, and then if you start seeing short build up, we're in for probably a cut of more 200 or 300 points.
That's right. And what have you observed on the charts, Pradeep? I'm just wondering. You're itching to get into the conversation based on...
Not really, but as you mentioned, there are several heavyweights that are under pressure. So Maruti is the other name from the same auto segment. Then you have 2 heavyweights from financials, HDFC and ICICI Bank. Interestingly, ICICI Bank is an outperformer. It hit the all-time highs recently and is correcting now with good volumes. What kind of pattern, if any, you have seen? Would you like to short any of these, HDFC or ICICI, Aditya?
So yes, all these stocks have outperformed, as you just mentioned. So Maruti is also weak on the charts. If I take a look at the weekly chart, if I take a look at the monthly chart, so the RSI for Maruti on the monthly chart was sitting at extremely overbought levels. So that tells that there's some bit of profit booking which was due in the stock Maruti, and so you can expect another 5 to 6% or probably 10% slide as well in Maruti. That can't be ruled out. Same goes for ICICI Bank. So ICICI Bank, as you mentioned, was an outperformer. So another 5 to 6% slide in ICICI Bank cannot be ruled out. So these were the stocks which actually led the rally in the month of January. So you can expect some bit of profit booking in them, definitely.
Well, the story of last 10 days was that the money was moving from broader markets to the large cap stocks. Probably now there is profit booking which has crept in even in the large cap stocks, because I remember all these private banks, especially ICICI before its earnings, had seen a good amount of days where it was seeing almost 2 or 1.5% of gains almost every day. So probably there is maybe some shift in portfolio as well, as there is some negative sentiment which is there in the market. But I just want to pull up the India Volatility Index. Usually post an event, you do see the volatility cooling off, but that's not been the case today. In fact, as we speak, India VIX is also trading around a day's high. Sarvendra, one stock I want to take your view on. Gen Irrigation, it was down 10% yesterday. I know it's in the F&O ban, and probably yesterday also what we saw was huge amount of unwinding which came in on the stock future of Gen. Today also there is a lot of weakness which is being seen. It's down almost 9 to 10%. How does it look on the charts?
No, extremely toppish, I would say. Extremely toppish. See, this is among the, if you look at Gen Irrigation, it's among the weaker of the stocks. And why I say that? Because the 2008, 7-8 levels, or it had a eventual top in I think 2009. This was one stock which actually topped out in 9-10 and took out that high then when the Nifty and Sensex could not. But it has now clearly struggled, and it's just at a 60% retracement to that entire decline that it had from 250 to around 50 odd rupees. We are just sitting at a 50-60% kind of a bounce on that one. And my sense is that in a slightly longer term, the overall setups still look weak on this one. So my sense is that probably this stock can test 70 to 75 levels also going forward, but that would probably take 3-6 months. Definitely, I think the trend has inverted, and it will be a time-consuming process, but you can easily say that 15 to 20% more is left as far as Gen Irrigation is concerned.
Okay, Vinit Bolinjkar, he's head of equity research at Ventura Securities, joins us on the show as well. Vinit, good having you. Thanks so much for joining in. What are you telling your clients to do currently? Sit on the sidelines, because a lot of quality names too are by virtue of collateral damage are taking a beating.
Actually, it's a bloodbath where people are selling first and thinking later, or there is thinking has been suspended. So in this kind of a market, it would be a little adventurous to venture in front of a falling knife. So the best idea would be let the fraud settle down, because money making had become very easy over the last 2 months. People were chasing returns, and they were throwing caution to the wind. And now where all the stocks have been richly valued, some of that creamy valuations are being butchered now because of profit taking. And it could be quite a while before things would settle down. So the best thing for investors would be to bide their time, book profits in lesser quality names, hold on to stocks of good quality and pedigree, and just ride it out.
Okay, I mean, are clients at your outfit selling large caps as well? I mean, hitherto we have heard that there is some bit of churn happening in from the mid caps and the small caps towards the large caps. Today is the first day wherein we've seen a meaningful cut on the large caps too. Are people doing that, or the selling is restricted to the mid caps and small caps, if there is selling in the first place at your place?
So actually, we do not have too much of volatility selling as such, because we generally are buyers and we believe in the growth story of the country. So we are pushing stocks that we like and asking clients to buy those stocks. So Jain Irrigation, which has taken a hit, it's a quality name. It's a leader in the business of micro irrigation. So we like that stock, so we would be advising our clients to buy that. We have new names. Building products industry is doing very well. In the absence of sand scarcity, and where there's a premium on completion, stocks like Visakha and all the building product companies will do well. So if they were buys at higher levels and the business models are intact, so it obviously means that with the worn down levels, stocks become increasingly attractive. So we are pushing stocks like Visakha Industries, where our target is about 986, and at about 700, there's decent scope for appreciation over the next 3 years.
You know what could honestly happen, and again, I'm no expert on where the markets will hold, if they hold, whatever they hold, but what could or what will happen or what looks likely to be happening right now is that a lot of I think Basant Maheshwari put it well. A good time to get off the kachra in your portfolio if you have under research stocks, yes, get out of them. But what will happen is that a lot of stocks that you always wanted to buy, or if you have in your portfolio and if you thought that you wanted to enhance the position, but you didn't get a chance because the valuations just went up to another extreme. Maybe, just maybe, if this is the pattern that will continue, I make a caveat, I have no idea about whether this continues or not. But if this is the pattern that continues and looks like it could, then you might actually get a lot of quality names available at lower prices now. Whether at that price, would they correct further and you'll get a better opportunity? Anybody's guess. Does it stop here? Does it go to 10,550? Does it go to sub 10,000? You never know. Somebody in the morning, I think, made a reference of 4 digits as well. But that notwithstanding, it'll be interesting to see the quantum of bloodbath at the broader end of the spectrum. As you said, I think you're right. Small caps would probably be down about 15% from the recent highs that they made. I think they were down 6-7% 4 or 5 days ago. And you add another 6-7% currently, the small cap indices over the last, from the peak, have probably lost 12 to 15 odd percent.
So my own financial advisor refused to believe that markets can correct 10% from here. Now, I don't know what to say, because this was a dream run for last 13, 14 months. And that is why I think one should really be cautious. We haven't seen such a long run, just one-way move, no significant correction.
No volatility.
Yeah. But in a way, it's good. I guess the weaker hands are getting out of the market. Now, probably, as you said, in quality stocks, you will see some buying coming back. So, but for how long does this pain last is a bigger question.
Yeah, but why do you want the weaker hands to be out?
No, they'll come back. Let the strength come back. I'm sure, because who's going to sell today, Neeraj? I don't know. FIs yesterday bought 10,000 crore in cash, and I, in hindsight, thought on a day like this when LTCG impacts them as well. In fact, I was just listening to one of the interviews of Samir Arora, where he highlighted, he runs an India-focused fund now. Does it get impacted? Yes, it does. Is he going to shut down the fund? No, he's not going to shut down, but definitely the returns gets impacted because he'll have to pay LTCG now.
It would be interesting to see what happens in US markets also, because there was a breakdown 3 days back, and after that they have been consolidating for a while. If there is a further sell-off and we hit new lows, then all this talk about whether there's a margin pressure, whether there is anything to do with budget, I think it doesn't really matter, because if global markets continue to fall, you'll just hold that momentum.
That goes without saying. I think because so far the rally has been on basis of the global market liquidity was so much that India was also going ahead with it.
Yeah, I think Ridham put it very well, and he said that if SPX is going to fall, no matter what you do, you will fall. In fact, speaking of Ridham, let's hear out. He did not expect the long-term capital gains tax to make a comeback this year. But the India head of equity research at Morgan Stanley says he supports the tax in principle, and spoke to us earlier, of course, and said that he won't. He doesn't think it will really impact the Indian equities, which are now more dependent, as I said, on global trends.
I think 80 to 85% of what the Nifty does in the next 3 months has nothing to do with India. So we can keep printing our growth numbers and our capex numbers. The market will do its thing because the Dow Jones will do its thing. And if the Dow goes down, the Nifty will have to fall. It doesn't matter. Look at this earnings season. It's been a big surprise. 3 out of 4 companies have surprised the analysts. Yet, only 1 out of 3 stocks have gone up after the earnings.
Well, maybe the
market doesn't want to go up because there's pressure on the SPX, and there's a little bit of a nervousness out there in global equity markets. So there's no bid left here.
Okay, I just wanted. I was reading your note as well, and just throw in one question as well, since you talked about how markets could do. You've gone ahead for infrastructure owners, corporate lenders, software, which you have been bullish on, to be fair, for a while now.
Yeah.
And this is, I thought, in stark contrast to, not a stark contrast, but a bit of a contrast to the large list that you preferred when you came out with that amazing report on India's digital leap as well, which was pro-urban consumption, pro-corporate lenders, pro-non-corporate lenders, HDFCs, Kotaks, etc. Yeah. So is this
that's a 10-year view. That's a 10-year view. This is a 12-month view. So we should not mix up. Yeah. I think the next 12 months it's a good environment for corporate lenders. Do you want them as compounders for the next 5-7 years? Probably not. But can these stocks go up 30-40% this year? They can.
And infrastructure owners?
Yeah, I think that also is possible, because I think the economy is picking up and growth is picking up. So infrastructure, industrials will do well this year. And likewise with corporate lenders, I think NCLT process is gathering momentum. There's a further tailwind from the budget, which reconfirms their intention not to tax or to provide tax protection to accumulated losses. So I think that will help the corporate lenders. So it's a cyclical or I think a 1-year call versus a 5 or 10-year view on India.
Okay.
And we continue to stay constructive on consumption. So there's no let up on that. I think, I just found my focus list loaded with rural names, and yesterday all of them were doing their jig. Yeah. So I think that also is the case for the next 12 to 18 months, that rural-oriented consumer companies should actually do quite well, because the rural economy is picking up. After a few years of pain, because when the Modi government assumed office in 2014, the first thing they did was they crashed rural wages. So Manrega spending went through a restructuring. It became a public works department from being a wage distribution program. And that's what helped stem inflation. That was their contribution to inflation. And wage growth, which was running in the low 20s, came down into almost at 0. Imagine the amount of pain rural India had to go through. So I think that pain is also behind us.
But what will push up the rural cycle now? I mean, because if, like you were saying, and we've got those spending numbers, none of the rural schemes have large spending increases, right? I mean, even the affordable housing scheme, which was supposed to be their flagship, is flat.
Yeah, but there has been enough infrastructure spending in rural India, and that's creating jobs. The challenge is slightly different, actually, in my view, and it's a long-term challenge, which is a lot of landless labor is leaving rural India or farmland seeking for jobs. And that's why this feeling that there is not enough job creation. Actually, when I look at the indicators, job creation is very strong.
Which indicators are you looking at? There's a nice debate on which job indicator who wants to look at.
We'll share those to you with you, but my job indicators are actually suggesting, and in fact there have been independent surveys also, that India has had very strong job creation, but we have had job losses in rural India. So I think that will stem for a while, because inflation has come down now on a sustainable basis. Inflation expectations have come down, and wage growth has come back from 0 to about 5-7%. So wages have turned positive on a real basis. There's been some pickup in farm growth. There's been some pickup in farm prices. So nominal farm incomes will also do better. The government has spent on infrastructure in rural areas. Road construction has been strong. Electricity distribution distribution has been built. So that will have its effects with a bit of lag. So I think this year we should see some recovery.
Well, as we speak, the markets have slipped even further. By the way, now Bajaj Finance is the top loser on the Nifty 50. Indiabulls Housing Finance, Bajaj Auto is there, yes, but Indiabulls Housing Finance is amongst the other losers as well. Axis Bank has some corrective moves as well. Maruti Suzuki is down 4%. We're talking about Maruti at 10,000. Maruti is now at 9,000. That's a 1,000-point shave off from the recent highs that Maruti has clocked. And by recent, I mean I think in December or November was when Maruti Suzuki clocked at 10,000 mark. Slew of reports talking about targets northwards of 10,500, closer to 11,000. Maruti, guys, is at 9,024. Vinit, a clutch of large caps are now starting to look a lot more reasonable than what they were looking. Bajaj Finance, for all the fanfare, is down from a 52-week high northwards of 1,900 to 1,631 as well. So a lot of, I'm not saying it's cheap valuations, but it's starting to look like it might become attractive valuation if this trend continues. What would be the large cap names that people should keep on their radar to buy? If not now, then maybe after 200, 300, 400, 500 points as the case may be. What are your favorites?
So, among the favorites, I like Reliance Industries, ONGC, HDFC Bank. You mentioned Bajaj Finance. I like United Spirits. Big businesses with very good growth potential over the next few years, and dominant positions, and in this unorganized to organized kind of motion, I think these stocks will only do much better. And I think the rally in the mid cap and the small cap has stalled for a while, and if there would be any money which would be coming in, it would obviously be into the large cap names and high growth sectors. So it's better to be with the large cap stocks, and there is a lot of safety out there with significant upside potential.
Pull up TTK Healthcare, that's the counter which is holding to the gains that it has seen post the numbers came about. TTK Healthcare is currently trading with gains of 13.5%. The profits for the quarter were at 12.2 crore versus 3.5 which was seen in the corresponding quarter. In fact, the profitability sequentially has also seen some improvement. Vinit, you were talking about United Spirits. Weren't you disappointed with the numbers they posted for the December quarter after the expectations were sky high, because the quarter two numbers from the company were really good?
So I expect an EPS growth of 50% over the next 2 years. And without looking at the quarterly numbers, I think that this story will pan out over the next 2 years. They've done a lot of right things. And so I expect this stock to do well and hold on its own and constantly move up, because the demographic
Sorry, I think we have lost that line, looks like. Okay. Have you taken a call on Reliance yet? 907 now, down almost 4%. Sarvendra, have you looked at the charts? What could be the possible targets or stop loss on any short position?
Yeah, absolutely. That's a stock under regular coverage. And I think if the Nifty has to go down now, probably from here, whatever, 5-10% that we are expecting, I think Reliance will definitely play a part in that. And clearly, I think it had a strong support area at around 900. That once it gets violated, probably the momentum can pick up on the downside. Not that it has not already done that, but I think clearly the stock has gathered weakness this week. And if you look at it, a 3-bar pattern on a weekly setup, I think it's a clear 3-bar inversion. And it's a slightly bearish setup. The only thing is that if you have not shorted till now, probably wait for a break of 900 and then go short with a stop loss at above 940. And in that sense, I think it will slip all the way till 780, 800. So a break on 900, and I would expect that the next round at 8,000 would get tested. 800 would get tested on Reliance. So if you have not shorted, wait. If you have shorted, hold. And short below 900, look for a target of 780, 800 on the downside. Keep a stop loss at 941 on a closing basis.
Okay. Now, before we hit that break, while there is carnage on Dalal Street, Nikki joins us with a quick perspective on TTK Healthcare. I think that's the buzzing stock of the day. Navneet was just speaking about it. Nikki, very quickly, what's working here?
Sure. It's a 20% rise, as much as 20% rise that we've seen for this counter. The intraday gain is the highest that we've seen since the demonetization level for this counter. Volumes remain pretty much strong at 155 times its 30-day average volumes. As Navneet just mentioned, it's the result which is working well. In terms of revenue, it's up by 19% on a year-on-year basis to a number of 145 odd crore. Net profit is more than threefolds higher at 12 odd crore as compared to nearly 4 odd crore, 3.5 that we've seen in the corresponding quarter. EBITDA has come up by 19% as compared to 7.6%, and also margins have expanded sharply. Cost saving techniques and raw material cost decline in that as a percent to your net sales is what has got the cost optimization. The raw material cost has declined to 39% as compared to 46%. Other expenses too have inched down. If you look at the segmental breakup, just in terms of EBITDA that I'm going to be quickly addressing, pharmaceutical as a segmental has gone up by 85%. Consumer products have risen good by more than 100% jump out there. Medical devices also have inched up, and we've also seen some revenues as well as operational profit creeping in the protective devices of this company, which was a segment which is not present in the corresponding quarter of the previous year. So that's that in terms of the buzzing stock that we have.
Thanks, Nikki, for the update. TTK Healthcare remains an outperformer in today's trade, and if Vinit is back with us, maybe we could take a view on that. Vinit, if you're able to hear me?
Yeah.
TTK Healthcare is the stock we are discussing. What's your view?
We don't cover that stock, I'm sorry. Don't have coverage on it.
Pradeep, one more stock which has gone up on earnings is DFM Foods. If you could just pull up that counter. In fact, I've just opened the numbers. The profits have come in at 8.4 versus 5.2. And as you can see, the gain that has come in the stock price is just post the earnings. So still, markets are rewarding good set of earnings. That's what we've seen in the form of TTK Healthcare, and the other one is DFM Foods. But Tech Mahindra, the IT pack is actually holding up.
Guys, the Nifty, honestly, just the Nifty, 10,760 now, 258 points down.
Even Bank Nifty, it's breached the 20-day moving average. Now it's going to fall below the 26,500 mark.
There's a lot of pain there on the screen, mind you. I think we should let's just take a break. We come back with some more thoughts from our experts, but there is carnage on the street right now, and doesn't seem like it is stopping as we closing in on the end of the day. Come back in just moments from now and talk more about this. Keep in mind, a lot of selling, and we'll get you some more perspective from dealing rooms as well on the other side.
Life's so lovely, live life happily. Oh, plan your life the way you want it to be.
LIC's new endowment plan offers a combination of protection and savings.
Invest to save and get insurance. Bring home eternal happiness.
City Union Bank, trust and excellence since 1904. City Union Bank, trust and excellence since 1904.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
just business news, we're news for business people.
Back with countdown right here on Bloomberg Quint. We are nearing the 50-day moving average on the Nifty Bank, if I'm not wrong. Still some time away, yes, but maybe we've broken the 20-day moving average, as Navneet was saying. So that is weak. 700 points now down for the Nifty Bank, and led predominantly by the private banks, but nothing is spared, I'm sure. But ICICI, HDFC Bank, a clutch of those names under a lot of pressure. One quick thought on the Nifty Bank, and if there is a trade here, and two, a stock that I spotted, which is taken here on the chin, is BEML. Any thoughts here?
So yeah, BEML has broken down from a descending triangle pattern. If I take a look at the target of that entire descending triangle pattern, it comes to around 900 odd levels. Right now it's trading at about 1290 odd levels. So the first support is at 1100. So that will be the first target. You can go short on BEML for a first target of 1100. And 1100 breaks, we are headed towards 900 odd levels. So this is a good 11% correction that you've seen in BEML today. This can follow through in the coming weeks as well. So there's a short trade in BEML at current levels, definitely.
Okay, Nifty Bank?
Nifty Bank, yeah. So Nifty Bank is also weak at the moment. So we had seen a good outperformance on the bank Nifty. It was up about 7.5% in the month of January. It had outperformed Nifty as well. So there's some bit of selling in the Nifty Bank that will continue. It has broken down from a channel. If you take a look at the yesterday's intraday chart of 2-hour and hourly chart, it was oscillating in a rising channel. So it has broken down from that rising channel in trade today. You can expect another 2% or 1.5-2% weakness in Nifty Bank here as well.
Okay, we'll let you go at that, Aditya. Thank you so much for taking the time out and being with us.
Pleasure.
On Bloomberg Quint. That's the view from Yes Sec. Some results on the screen don't really matter. Tata Tele, that's just about okay. Bajaj Finance, Bajaj Auto, Axis Bank, Ultratech, 4 stocks, and then a couple of others like Reliance too, looking slightly wobbly. OMC is looking under pressure. HPCL, for example, is down about 4% in the session. Indiabulls Housing Finance down about 3%. There's a long list of losers, hardly any gainers, but for Tech Mahindra, TCS and HCL Tech. So clearly it's only IT which is holding out on the index for sure, the large caps for sure. The mid caps, we've spoken at length about a clutch of other names. Vinit, any thoughts that you have on PC Jewelers? They've given out, okay, I think we've lost Vinit as well. But we'll get in, or rather we thanked him, but we'll get in TS Hurrier and maybe talk about it. One stock that's doing well, guys, is InfoEdge. The Zomato stake sale, helping the stock. Even on a day like this, it's up about 3% in trade. So good going. And then the age-old trade of IT seems to be working today. Almost all IT names doing okay, or holding out at least, if not doing well.
Yeah, that's the way you should look at it, because if you list out the top 100 stocks on NSE by turnover, only 5 stocks in green, 95 in red. And TCS is the most prominent name that figures on the higher side, you know. What is also interesting, PC Jewelers, look at the turnover at discounter is higher than Reliance Industries, ITC, Maruti, SBI. This is the top traded stock today.
Wow. Well,
it went down, came up, going down again.
Yeah, it speaks volume, because yesterday, if you look at the total traded quantity on NSE was 62 lakh shares. Today it's 12.4 crore shares which have just been traded on NSE. I have not seen the BSE data. So there's a lot of activity which has taken in the cash segment. I think it'll be interesting to see if any institutions have sold stake, because I remember FIs hold 30%, promoters have 60% stake. So then the market with the public is only about 10% for PC Jewelers.
Well, T.S. Hurrier is joining us now, founder and chief executive at HRBV Client Solutions. Hurrier, any comments on PC Jewelers? We have been getting several queries since morning.
No, frankly, it beats me. You know, a stock correcting from 440 to 190 and back to 400, I don't know what to say. But see, broadly on the market, I think what we understand is that there's been a lot of HNI selling that has been happening, you know, especially since the grandfathering clause works in such a way that if you sell before 31st of March, then you don't pay any capital gain. So I think the index at 11,000, near about 11,000, so people are seeing an opportunity in selling out. I'm not sure why the volatility came about in PC Jewelers, but definitely I think the selling seems to be largely driven by this grandfathering clause.
So, I mean, are you saying that people are actually selling out in order to take advantage of the long term? They don't have to do it today. They can do it until 31st March.
You never know. See, it's like, it's a kind of a Me Too approach. If you find 10 people selling and the market is down by 2.5%, I would rather take my profits at these levels than wait till March 31st, because you don't know where the markets will be on March 31st. So I think that's a kind of a Me Too syndrome that is playing in the market. Nobody wants to miss out. Markets at 11,000, a very ripe area to take your profits off the table. And I agree, you've got 1.5 months to take your money off the table, but you don't know where the markets could be. So I think it's a bit of a Me Too kind of panic that has set into the market.
I think Ashish of Motilal also mentioned that in your show today, Neeraj, that it could be a panic where everyone's just, going after each other.
Yeah, well, let's wait and watch if that happens. By the way, it's 3:10, so that time of the show wherein we should ask Navneet about stocks that could be moving into the FNO ban or out of the FNO ban on Monday, though I doubt that out of the FNO ban will really have a positive impact on some of these stocks, Navneet, but what's the list looking like?
Well, one stock, Neeraj, we've been talking about is PC Jewellers. That's likely to enter the FNO ban. Surprisingly, if you look at the build-up, it's not been on the stock future of PC Jewellers. There's a lot of activity which has taken place on the option side. If you look at the overall open interest as a percentage of market-wide position limit, yesterday was nearly 70%. For a stock to enter into the FNO ban, it has to breach the 95% mark. As you can see, the futures open interest is just up 6 to 6.5% for a stock which is down 24%. Majority of the action today on PC has taken on the option side. The other one is Jaiprakash Associates. That is likely to come out of the FNO ban, maybe for Monday's trading sessions, as we've seen some unwinding, especially for the February futures of JP Associates. I think nearly 50 lakh shares have been shed so far there. Yesterday, it was nearly 84% open interest, and for a stock to come out, it has to breach 80% mark. So watch out for these counters for Monday's trade.
Wow, we will watch out. As I look at the weekly returns, by the way, while Pharma may not appear in the list of the top losers, this week has arguably been about the kind of incessant selling that we've seen in large cap Pharma. Maybe Amazon, maybe Trump, maybe a mixture of both, but it certainly hit the Pharma names this week. If you look at the 5-day return or this week return, Reddy's, Lupin and a Cipla and a clutch of others have really gone off. Sarvendra, are you taking any trades on Pharma now that a part of correction has already happened?
Neeraj, I think it's a large part of the correction is over. Again, I think that could be proven. That whole thing can get challenged, because I still believe there's lots more juice on the downside for Pharmas to go. But yes, you don't want to short something which has already gone from 1200 to 600. But in that pocket, I think DV's, Ajanta Pharma, Cipla, Cadila Healthcare, they are names which are still close to their highs and way away from their previous lows. So I think there's still a lot of juice left there in those 3-4 names where you can take short them and get around 15-20% on downsides. Not to say that Sun Pharma cannot go down. It can actually go down and probably go down to lower levels. But the only thing is that that one is already corrected 50% and very difficult to initiate a short from these areas. But these 4 names which I said, which are close to highs, I think clearly I would go ahead and short. If I have to pick one out of the 4, I will say Ajanta Pharma is something that we can short. And as a disclaimer, I would say that we have advised these trades to our clients as well. So you should be taking that advice with a pinch of salt. But my sense is that everything will go down apart from IT, ITC and Hindustan Lever probably, which can outperform. Rest everything, I'm saying there's no saving grace in this carnage.
Okay. By the way, just before we get to dealers, want to mark, while PC Jewellers and Vakrangi would be the top losers this week, 2 stocks held out. SpiceJet up 8.5%, Inox Leisure up 4%. So some stocks bucking the trend, as you would always find, but some interesting names out there, some consumption-related names have done reasonably okay for themselves this week. But even on the BSE 500, by the way, if I adjust for the top gainers and the top losers, iShares features in the list of the top gainers on the BSE 500, which clearly shows that on the mid-cap end of the market, there weren't too many gainers, except for then you have a large-cap name coming in and being in the top gainers list. Clearly shows the kind of pressure that we had at the mid-cap end of the market. But anyways, let's talk about what dealing rooms are recommending in the session today. Darshan and Yatin join in with their channel checks. Did anybody even was in a mood of talking to you guys? Either of you can start today.
Yeah, they were, but actually most of them were they were indicating that now they are mainly on a wait and watch approach. Some of the stocks that have been spoken about, one of them is Indiabulls Real Estate, in which what we heard is that it's down 8%, but the promoter circle seems to be accumulating, and one advantage that it has compared to others is it's out of the F&O ban. So the carnage probably that could have had if it is in the F&O would have been much higher. So in that way it's a better off. The next one is Sun Pharma, and ahead of the all-important Halol inspection that starts on the 12th, there seems to be a little bit of hope that this time around Sun Pharma will be able to get through the US FDA clearance for Halol, and that is why, you know, when most of the pharma stocks have corrected, today Sun Pharma is doing well. And TCS, today Reliance slipped below the 6 lakh crore market cap. TCS is the only one. The general sense is, at least you know, till the time there's more clarity on this long-term capital gains and how it will work out in this carnage, TCS is something that you should stick to. IT overall as a pack seems to be decent, and it's better to stick with the largest one in it, and that is TCS. That's what some of them have indicated. But Yatin, what are you hearing?
United Spirits and Radico, these are the two stocks wherein there is some selling which is happening. And of course, this comes after the Kerala government budget, which has imposed higher duties on IMFL liquor as well as other products like beer. So, you know, on alcohol, the taxes have gone up, and probably more states are, you know, likely to follow suit. So in that light, United Spirits is one stock wherein we are looking at some selling which is happening at current level, and dealers do expect this fall to continue moving forward as well. Watch out for Maruti, Neeraj, and specifically we have the all-important Suzuki board meeting in Japan, you know, on Monday, when they will be, of course, announcing their quarterly earnings, and more importantly, the new royalty agreement with Maruti. And if that gets approved, probably that will be some relief for a company like Maruti. Of course, the contours of the royalty transaction and the agreement will be disclosed by Suzuki on Monday. So probably watch out for this stock, should be active. And Jet Airways, that is again one stock wherein domestic fund flows are on the selling side. So probably this stock dealers again expect some weakness to continue.
Anything about Vakrangi or PC Jewellers, Yatin?
So Neeraj, we spoke to a couple of market participants, and you know, in the conference call also there were you know, a lot of large funds and institutional investors, HNI investors, but probably, you know, the PC Jeweller management was not able to convince most of them. In fact, we have Vakrangi's investor presentation, which put you know, the relationship with PC Jewellers. And PC Jewellers, you know, spoke on the conference call that they do not have any relationship with Vakrangi. So if Vakrangi is putting out a presentation in the public domain, having, you know, saying that they have a relationship, or, you know, PC Jewellers uses their platform, and then PC Jewellers denies it, probably there is some bit of suspicion, or, you know, some bit of panic which comes into the marketplace. And, you know, Vakrangi, more importantly, came out with a you know, investment policy in which they said that they will not allow any investments in equities to happen, and that comes in after they bought in shares of PC Jewellers
and HDFC Life.
Yeah, and you know, what happens is that if your committee says you cannot invest in equity, there is a high probability that today, you know, you might have liquidated those shares, and probably it would have been the Vakrangi shares which the PC Jeweller shares that Vakrangi bought came into the market, and probably that created some panic. That can be one of the probabilities. Of course, at the end of the day, once the bulky data comes in.
So when did this committee take this rule? No.
So they put it on the stock exchanges a few days back that you know, this will happen. Okay. So this happens. The committee decision happens after they bought shares in PC Jewellers.
Sure.
And once the committee says no investment in equities, there is a probability in the marketplace that Vakrangi would have gone ahead and sold shares of PC Jewellers that they bought few days back. So, you know, that, you know, this is something which, you know, does not tally, and probably raises our ears. So, you know, probably that is the reason why there was a lot of panic.
That certainly seems to be the case, guys. That's, you know, the curious case of Vakrangi and PC. There's a movie, Curious Case of Benjamin Button, yes. But this is the curious case of Vakrangi and PC, and boy, they are the stocks of the week, to be honest. PC is the stock of the day. Vakrangi is arguably the stock of the week. The top two losers at the broader end of the spectrum.
I think PC Jewellers is the one that people will be more worried more about, because when they bought in, they they must have anticipated a much lower risk in terms of governance compared to what they might have anticipated in Vakrangi. So that's the shocker.
But hey, if that was the case, you had that stock, Vakrangi, going up to a market cap of 50,000, almost 48,000. It's not a tiny tune. It's not a 500 crore market cap moving up to 1,500 crore. It went to 50,000 crores.
I think it's about 20,000 now, probably, after the correction.
25,000 probably. Let me try and dig it out for you. But
no, so 3 days of circuit.
That's an estimate. It should be about 25,000. Yeah, not more than that.
Yeah, this is really interesting. Anyways, I'm sure there'll be a lot of comments about this. 27,800 crores to be precise, even currently for Vakrangi software. Anyways, getting maybe a closing strategy from Sarvendra first. As we speak, the Nifty Bank is down over 3%. The Nifty is 871 points down 2.5%. This is a sharp pullback. As we entering the closing minutes of trade, there is even more pressure on the index. Sarvendra, any trades on any of the key indices first, and then we'll get to specific stocks.
No, indices we discussed. I think clearly Nifty, I would believe that now you would not be able to take a trading bet, but on a positional side, I think it becomes a sell on rise kind of a market. If someone has the wherewithal, you can short from here as well, but the stop losses will be slightly far. My sense is that we are headed towards that 9,700, 10,000 mark. So if that's the target, I don't mind even shorting here as well. So eventually next 3 to 6 months, we should end up close to 9,700, 10,000 at least, if not more. And I'm saying at least, if not more. And yeah, I would short from here itself. I think clearly there's weakness, another 100 to 150 point bounce. If it comes, then I would probably add. So I would short maybe say 30, 40, 50% right now and add into a bounce. That can be a strategy, good strategy on the Nifty. Same goes for the more or less same strategy for the Bank Nifty. The only concern in Bank Nifty here is that now it's slightly oversold on intraday charts, and you could actually be better off waiting for a bounce and then selling. And if I have to go, then I'll go with individual names. Then if I have to short within the Bank Nifty, I would say I would short ICICI Bank, I would short Axis Bank, keep 4%, 5% as a stop loss, and look for those 10 to 12% kind of downside targets still, which I believe are pending at least on Axis Bank. ICICI probably has corrected more today, but I think both Axis and ICICI are looking weak.
Would those be your top calls? Would it be the banking names that you would go short on, or is there an individual name that you believe is a better trade than the banks? With
today's fall, I think Neeraj, you'll have to go back and go and look at risk rewards. I cannot straight away give numbers, but I believe, as I said, barring apart IT space, the large cap names, HUL and ITC, I don't think that anything else will be able to outperform the market going forward next month to 3 months. So I think there will be punishment all across. It might rotate. One day it's one set of stocks going down, other day it's another set of stocks going down. But this inefficiency which had built into the markets, and we have also discussed the even year cycles. So if this is the even year cycle turn, it does not stop here. We know that, Neeraj, by the historical data, 20 years, 20 cycles in the last 40 years, even year cycles, average declines have been 30%. And let's keep that, because that's an actual figure. It's not that I've created that number. It's a Sensex data which tells you even years, if the market corrects, the average fall is 30%. So I'm thinking that we are still not done. We are still not done here.
Okay. But Hari, what's your view? Have you already started identifying some stocks that you would like to buy if they fall further 5-10% from here, or is it too early?
See, I think it's not only hard, but I think it's impossible to catch the bottom. And whether it's 10,700, 10,500 is hard to say. But the good thing is, we just discussed about Vakrangi. It's a good stock. There's nothing wrong with the stock structurally. It's down about 40% from its peak prices. So what's the harm in going and buying that stock?
I think several fund managers and portfolio managers we have spoken to, they somehow didn't get into this stock, thinking whatever, they were not quite convinced.
But how do you buy the stock when you know there are sellers right there? It's been locked in lower circuit for last 3 sessions.
No, I agree. But at some point it's going to stop. At some point it's going to stop.
You like Vakrangi as a business model?
We think it's a great business model. 50,000 crores may be a little too steep. I agree. It's probably not justified. But the business model is great. I think the last mile is probably the only company that's a genuinely last mile model that you have in India. And if you're looking at the digitization that Mr. Jaitley spoke about so extensively yesterday, there is a big business opportunity for these last mile.
My question, Hari, is that if it was such a great opportunity which lent the company to forget 50,000 crores, even 25,000 crores of market cap after this fall, why isn't anybody else getting into the same space if it is indeed such a lucrative model?
See, I think a lot of reasons, I think not too many people are probably convinced, not too many people have the kind of wherewithal to get into a last mile. Last mile is a fairly complicated business. Okay, like for example, if you look at the MFI business, for a very long time there were just 2 or 3 players. And it was only when it achieved a certain scale that you found all and sundry getting into the business. So this could be a similar, digitization has just started in India. It's probably about 1.5 to 2 years old, not more than that. So, when that really takes off, I think you could see probably a lot of Me Too companies coming into the fold. But I think it's a great business model. I agree, valuations may have been a little, I would say, ridiculous at 50,000 crores of market cap. But definitely, I think it's a business model that is workable.
Interesting. Okay, there's some pain, of course, this week in Fortis Healthcare, Wockhardt, and some of the others too. What do you make of large cap pharma? Forget mid cap pharma. The pain that we've seen there.
See, I'm not surprised people are selling, because I frankly don't know how many people are really sitting on profits as far as pharma is concerned. But whoever is sitting on profits, I think it makes sense to take it off the table and not pay any tax on that. And let's not forget that stocks like Sun Pharma are up about 20% from their lows. So it's a good opportunity to probably sell and walk out with the stock. And I know we are not positive on pharma assets, be it mid cap, be it large cap. We believe that the way companies like Amazon and Warren Buffett are getting into low-cost pharma, the global model is going to change. See, Indian pharma companies have had a great time over the last 30 years catering to a market that never bothered about price. That is changing. Okay, pharmacies are getting together, competition is getting intense. So the pharma industry is never going to be the same again. And I think Indian pharma needs to prepare for that.
So the stocks that are doing well in today's trade, Hari, if you track any of these, TTK Healthcare or Apex Frozen, which has moved up, or Kaplan Point, for example, any of these on your radar?
We do like Apex Foods. We have been, it's a recent listing, but we have liked this stock quite a bit, and especially considering the kind of focus that the government has given on, aqua, the non-typical agri that they've been talking about. I think companies like Apex have a fairly good, I would say, potential from these levels.
So between Avanti, Apex, I think IFB, and also Waterbase, what do you prefer?
We don't track Waterbase closely, but our first preference has always been for Avanti. Avanti Feeds has always been a first preference for us because of the very niche markets that they serve in the Asian region. So that has been a first preference. But I think Apex again is a good stock. Of the 3 stocks you mentioned, Apex is probably a stock we would buy.
Well, the one space, Mr. Ariyar, which was in focus before the budget, and it's also rallied in the last 1 year, is the realty side. The Nifty Realty Index has taken a huge beating in today's session. I guess it's down over 6%. At these lower levels, if you're still bullish in the space, which are the stocks that you would look at? DLF is down somewhere 9 to 10%. I remember a lot of these brokerages were turning bullish on it.
See, I think the only negative I see from the budget is that the budget has taken a very strong view on killing black money. And that has never been positive as far as the real estate space is concerned, because like it or not, RERA or no RERA, there is always going to be some kind of unaccounted money that flows into realty. So that is something that has not gone down too well as far as the realty space is concerned. I would say is wait and watch. I think let us see how this stock sector pans out. You will probably get lower levels to buy any of these stocks. But yes, DLF continues to be our top pick.
Well, and that stock too is available slightly lower today. Almost all of these stocks are unraveling. But the story probably remains. I think Hari's right. Just wait and watch. If you're patient, you might get a lot of stocks at really lucrative levels. But it's time to start wrapping up the market. Sarvendra, Hari, just stay on for just moments. We'll just take in final thoughts from you. But as we start wrapping up the markets, hand it over to Pradeep to first bring up the large cap leg of the market. And it may look relatively better, Pradeep, but on absolute terms, there is carnage there.
Definitely. Look at the Nifty now, 10,741.42. That would be very close to the day's low, almost 300 points, 275 points on Nifty. Sensex is down 850 points, and Nifty Bank, similar story here. Sensex is almost at 35,000, but look at small cap, 6%. 4%. So small cap, I think, is now almost 16% in last 2 weeks or so, and mid cap is close to 9% in last 2 weeks or so. That's the total cut that we have seen so far. But let's look at some of the key contributors and look at the market breadth. Sensex 30 stocks, you have 27 in red, just 3 in green, and by how much? not even 1/4. Now only 2 in green, HUL and TCS. We'll look at the losers. You have Bajaj Auto and Maruti, 2 key auto names, and also M&M, Tata Motors, DVR, figure among key losers. What is also down is heavyweight like RIL, HDFC, ICICI Bank, Yes Bank, SPI. So banking is clearly the other pain point as far as the key index stocks are concerned. Now look at the tallies, down to 29 out of 30 actually in red.
It's a sea of red across the board today, be it the benchmarks or the broader market. Let me first start off with the stocks which were in focus. One was the stock of the week and the other is stock of the day. Vakrangi as well as PC Jewelers. Vakrangi was locked in lower circuit for the third straight session with cuts of 10%. Remember, this week the circuit limit was also revised from 20 to 10%. PC Jewelers, good intraday recovery. We saw, remember, the stocks also in the futures and options market, which gave traders a leg up to create more positions, over leveraged positions, but it did see intraday recovery, still closing the day with cuts of 25%. No respite, despite of management coming out and saying that they have no business relationship with Vakrangi, and in fact they also highlighted that the promoters so far have not sold any stake. Well, the other stock is Jindal Saw. Remember, these are the stocks which have rallied a lot in the last few sessions or last few months. So Jindal Saw also saw cuts of nearly over 10%. Your over leverage counters, Just Dial was also down, and it's in the futures and options space, and we did see a lot of fresh short positions coming about. They're down 12% for the day. CEAT reacting to its numbers today, and well, reaction was pretty bad. CEAT is closing at day's low with cuts of 13%. Adani Power is the other one which was down in today's session. Couple of stocks which reacted positively today post their earnings from the broader markets. One of them is TTK Healthcare. Good set of numbers, good growth in terms of bottom line this time around. DFM Foods was the other one which posted great set of numbers. You had Adani group of stocks which come under pressure usually on a day like this because they are high beta counters. So Reliance Naval was among top of them, that saw cuts of over 12% today, and Shrey Infra is the other one alongside BEML, and all these counters, remember, are in the futures and options space. They are over leveraged counters, and that's the reason we've seen cuts of over 10% for all these stocks, Neeraj.
Well, and I think Pradeep and Samrit have summed up everything. Don't need to bring it anything but for 2 factors. One, yes, the intraday chart, the contributors list, and you will see Reliance and HDFC and a couple of others, but it won't show the pain that lasted for some of the others. But you know, when these 4 feature with contributions northwards of in double digits, you know that there's something wrong with the equity markets on the day today. Quite a bit of selling, and not surprised that both Nifty and Nifty Bank have shown that. I just want to bring up the turnover, because we've been talking about turnover really shooting up in the preceding month. Wow.
The cash turnover is really high today. And in fact, Neeraj, yesterday F&O turnover on a day like budget day, you would expect. So yesterday somewhere it was about 15 lakh crore, though it's 7, but still it does appear on the higher side.
But yeah, it's nowhere close to what happens on an expiry day, yes. But the cash market turnover at 47,000 crores, I think this is the highest.
Right?
I don't think I've seen this. So the last number was 46.
42, 40, yeah, it was hovering around those levels.
Yeah, and that one number that we saw was 46. This would be the highest cash market turnover that we've seen. I wouldn't be surprised if there is both DI and FI cash market selling that has happened. The daily numbers on the fund flows would be very, very interesting to watch out for in the session today. That's quite a bit of selling on quite a bit of volumes as well in the session. Anyways, final thoughts from our expert. Sarvendra, before we let you go, you've given us your thoughts on the index, and just one quick word on one space that is bucking the trend in this large cap IT.
Yeah, we have been bullish on that space for quite some time, and we had turned bullish on that space when the IT index was close to 10,000, 11,000 odd levels. And on your channel itself, I think with Nikki, we were doing shows, and we were clear at that point in time that IT will be one performer, and with the market going down, IT will definitely be performing now. Now the only thing is now that stocks have moved. So in real terms, they might go a little down 5-10%. But overall, with the market, I think there is still will be outperformance. And if you have to hide some money, and which is where you have to be compulsorily invested and you have to be in the markets, then large cap IT definitely would be the space where you want to park that funds for some time till you see opportunities coming up on the other side. And coming to the Nifty chart, I just want to highlight one point that today's bar has been a key outside. This week's bar has been a key outside bar, which means it broke the high of the previous week. and broke the low also of the previous week and closed much below the low of the previous week. Actually, it has gone back into the close and almost the open of the preceding week as well, week preceding the preceding week. So I think 3 bars, 2 major bars, it's almost engulfed. So I would say, and with this kind of volume at these high readings, I think it would be definitely a major turn, if not a small one. So I would say that it would take a lot of patience and money now to take out this high that we printed at 11,100 approx. So I think this high could be the high for the next 3-6 months.
Okay. Hari, sentiment arrives soon or difficult to say that?
See, hard to say how soon, but I would believe it's probably 10 to 15 days, at best. Again, I've been a perpetual bull on this market, forget about valuations, forget about technical sentiments. I was just telling a client today morning that instead of announcing this grandfathering clause, had the budget said that all shares purchased till 31st March will be exempt from long-term capital gains tax, the index would probably have been 13,000 by March end. So it is just a technical issue. I don't think I would read too much into that. Again, I don't believe capital gains tax is a big issue, because had that been an issue, then STT would not have come in at all in the first place back in 2004. It's going to be very hard to measure. It's going to be very hard to prevent write-off of losses, carry forward of losses. I'm telling you, it's going to emanate as a big mess in the coming days. So I think probably 1 year down the line, don't be surprised if it again goes out. That's what happened in 2003. They introduced capital gains tax and removed it in 1 year because the confusion was just too much to handle.
Yeah, you'll have a lot of compliance issues going.
Yeah, you have what to carry forward, what not to carry forward, what to write off, what not to write off. A capital gain still last year, loss not acceptable. Now it's acceptable. So much of confusion.
Very cumbersome.
Anyways, Hari, thanks so much for taking the time out and joining us and giving us that perspective. Sure. Always good having you. Well, we'll wrap up this show. Remember, on the other side, we'll get you a BQ explainer of what would happen on your long-term investments, the LTCG tax that has come in, and a simple explainer with Pranav Seta as well as Ashish Somaya of what it means to you if you're an investor in the equity markets or, for that matter, in mutual funds. That's coming up on the other side. Stay tuned.
आइसक्रीम? ये है डबल आनंद। पहला आनंद पॉलिसी टर्म के अंत पर मैच्योरिटी क्लेम का पूरा भुगतान, और दूसरा आपके अपनों के लिए लाइफ कवर की पूरी रकम बिना किसी प्रीमियम के। LIC न्यू जीवन आनंद, आनंद ही आनंद।
City Union Bank, trust and excellence since 1904. City Union Bank, trust and excellence since 1904.
Are we live?